Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right. Hey guys, welcome back to another live stream. Hope you're doing well, and sorry for the change up in terms of layout. We are kind of on holiday. I mean, today we're working from home, but I have already left my station, so my setup is not nearly as robust as usual. You can see I'm not on camera, but hopefully you can see my chart okay and you can hear me okay. And if that is the case, could you guys just do me a favor and just type the word yes, or let me know that you can hear me, everything is okay, and we can proceed. I wanted to make sure we did some chart analysis here today because today's a big day. Even though it is kind of a US holiday period coming up, we do have some really key economic data. We have unemployment claims this morning coming out in just 10 minutes or so. Preliminary GDP also drops, and you have core PCE. I mean, these are measurements of inflation. These are measurements of jobs data and growth all at the same time here this morning. But again, let me know if you guys can hear me. Thank you guys. I'm literally checking. I don't have my dual monitor set up, so we are roughing it this morning, but look at all these wonderful people and names tuning into the stream. What's up, Shane, Cabby, Professor of HE double hockey sticks? What a name, huh? Bonnie, good to see everybody. Thank you for being here. Good morning. I'm going to be kind of jumping back and forth between this awkward way of checking the chat and my screen, but know that I will do my best here to give you guys some chart analysis as we count down the minutes to unemployment claims this morning. Let's get some information about the jobs data. Let's take a look at the state of the inflation story. And as we get into this, let's start with a quick check on the markets. S&P 500 near all-time highs. Yesterday actually did put in a closing all-time high, which is impressive given this. You know, I look at the S&P 500 and you scroll out and you say, man, it almost feels like when you look at this chart, we didn't go through a massive spike in inflation and wars in the Middle East and Russia and Ukraine and oil prices parabolic to the upside and crazy election cycles. And it's like you look at that and the S&P 500 just sort of kicks back and finds its way to new highs anyways. It's kind of incredible how resilient this market is. And when you sort of look at it, if you look at it pessimistically, you're like, no, that doesn't make sense. It shouldn't be up there. But let's look optimistically at markets for just a second. And I'll tell you what, if you're going to be a stock investor or trader, it definitely pays to be more on the optimistic side, at least in a bull market. And a bear market, maybe not so much. But in this recent bull market, my goodness, being an optimist has made you a lot of money. Or it's lost you a lot of money if you got too optimistic. Like if you're part of the GameStop squad or whatever, yeah, you can get yourself in trouble with too much optimism. But a healthy dose of optimism plus stock market long positions can make you a lot of money if you are patient and willing to find the right setups. That being said, when we look at the stock market, it still looks strong to me. Now, I want to say this. When we look at stocks near all-time highs, I don't go absolutely rubbing my hands together and, getting my wallet out the second I see all-time highs. I actually look for corrections, pullbacks. And I didn't catch this on the NASDAQ. I wish I did. A pullback here to this 20,500 level would have been great. I actually picked up SMH, which has been a real lagging component to my actual account. SMH, the semiconductors world, has not nearly performed as well as the NASDAQ has recently, but both NASDAQ and SMH have lagged the stock market itself, the S&P 500. The diversity of the S&P 500 is sometimes its downfall, but recently its strength. We see most companies performing well in the face of rate cuts coming, inflation cooling, and overall optimism around a return of Donald Trump, not necessarily because we like him per se or dislike him, but rather because of his tax cut policies for businesses. That is a very bullish thing straight up for companies because they have to pay less in taxes, keeps more money in their pockets. And of course, the stock market likes that. Again, when we look at the stock market near all-time highs, you have to look at it with, don't look at it with too much skepticism, because if you do that, you can just miss out on ginormous rallies. But we want to look at it, kind of from a perspective of, okay, well, I want to be a part of this, but I don't want to chase it. So where's the middle ground? Well, for me, what that means is you play the game patiently. You wait for dips, you wait for corrections. That's where you can find some better risk to reward setups in the market. NASDAQ, like I said, not nearly as close to its all-time highs. You can see the NASDAQ has actually been falling behind a little bit, still about 1.7% off of making brand new all-time highs. The Dow Jones well into its all-time high. Some real strength here as financials and utilities and industrials have been performing quite well off the idea of, again, a resurgence, or acceleration of the economy that is seemingly potentially coming from some of the change in policies that Wall Street is expecting from Donald Trump. So we'll see how all that shapes up. If we take a look also at gold here, gold, in my opinion, and I've said this several times on stream, does not look nearly as attractive from a trading perspective as it did most of this year. So what I mean by that is that if we take a look at gold and we say, okay, during this time when it was just trending beautifully to the upside, every dip, in my view, was a great opportunity to add longs, to build long positions, because we had some things at play. And I don't want to go backwards too much, but during this time, we had uncertainty about what was happening in the Middle East and Ukraine. We had uncertainty about the election, and the US economy was slowing. But almost all of that, actually, pretty much all of that has changed. Okay. Let's break that one by one on the fundamentals front for a second. The election is over. We have a decisive winner. Donald Trump's going to be the next president. That uncertainty is out of the window. Not necessarily whether you, again, it's not about if you like or dislike a certain candidate. That has nothing to do here. What I'm talking about is the uncertainty risk of peaceful passive power is behind us. We know what's going to happen on the election front. So that no longer is a story. Also, the Middle East, there seems to be some progress happening, right? We saw Biden give a speech yesterday discussing that likely or that there had been a ceasefire, which is a great thing for both loss of life standards, but also for markets. They like that. They like peace, right? And then finally, the U.S. economy has actually been more upbeat than expected. That's why the dollar, have you guys seen the dollar's been flying high, right? Dollar index up and away. Overall, it's been pulling back here a little bit, but up and away on the daily chart. Those are all catalysts to me that keep me on the bearish side of gold. What doesn't get me into short positions, however, why I'm not currently short gold, is because I don't like the technicals yet. If we get something like this, where we actually start to break support levels and start tremendously moving lower highs, lower lows, I'm actually going to flip fully into the bear camp for gold. In fact, let's go look at gold. It's getting a +3 on the Edge Finder. If the commitment of traders data shows some selling from institutional money, if the trend flips more decisively bearish, these are things that could get us some negative scores. But currently, with a neutral reading of +3, there's no actual setups for me in the short run for taking setups on gold. Speaking of the Edge Finder, if you don't have a copy of it, I should mention that we are currently running our biggest sale of the year, the Edge Finder, as we speak. Actually, there's only, 3 days left to the Black Friday sale. It is currently 45% off to get all of our software for a one-time fee. It is the lowest cost of the entire year. And again, if you are somebody who's looking to improve your trading in 2025 and you want to incorporate data, fundamental analysis, seasonality, sentiment data, all of that in one place, check out the Edge Finder, get 45% off. We'll drop a link here in the chat as we speak to speak to a member of our support team who can get you hooked up with that 45% off Black Friday sale. Don't miss that. That is, again, available for a very short period of time. I just put this on there. So, yeah, hit that link. You can send a direct message. Well, I didn't put it, but our wonderful producer did. But if you guys are looking for access to the Edge Finder, the best way to get that 45% off deal is just send a direct message to our support team on your screen. You can see it's in the chat right now or in the description down below if that is easier for you. So we've got just a few minutes to go here before, guys, we get into our first major news event of the day. And it's actually kind of two pieces of information. We're getting the preliminary GDP quarter over quarter numbers, and we're getting unemployment claims. Both of these are indicators of the U.S. economy. Let's think about this for a second. GDP numbers are the actual growth of the economy. Preliminary GDP, there are three sort of tiers or three waves of delivering GDP numbers, as these things are very complicated numbers to really derive. So they come out in the advanced, preliminary, and final GDP numbers. So the preliminary are the second revised numbers here. So advanced usually moves the market the most, but preliminary could also move the market. We're expecting 2.8%. That was what we got for the first round, right? Advanced numbers came out 2.8. So let's watch what we get. GDP is very interesting to me to keep an eye on. And it does have the impact, by the way, to change a lot of Edge Finder scores. So I actually could get a lot of trading setups based on this number. Unemployment claims also will be interesting to see. We get those every Thursday. And we've got about 45 seconds to go here before we get those numbers. I'm going to switch over so that we can watch it all together. We've got on the screen right now, you've got your stock market indices on the left-hand side. You've got gold right here, silver right here, dollar index bottom right, and oil far bottom right. So coming out here in just about 20 seconds to go, maybe we can go ahead and roll our breaking news. All right, just a few seconds to go, guys, before we get those numbers. Don't go anywhere after the potential spike. We may see a spike, we may not. We'll try and break this down to see what we actually get out of these figures. Let's take a look. All right, in any second now, we should be getting those moves potentially. Seeing a little bit of volatility here on the stock market front. All right, we did in fact get 2.8% in terms of preliminary GDP. So that would be as expected growth, not better, not worse. So probably just a kind of a neutral move. And again, another very neutral move here for unemployment claims. We also did get durable goods orders, which came in a little bit light. But overall, not a huge reaction here, of course. Gold hardly moved off that. Dollar index down a little bit here. As again, we are still seeing good GDP numbers. That was kind of the potential mover here this morning, was a strong GDP print, an upbeat GDP print. Would be very strong for the dollar, but at a 2.8% compared to forecasts of 2.8%, that is pretty unchanged. So it kind of brings us back to business as usual. So GDP numbers, actually, let me check this. Ooh, this is actually going to change the scoring. Check this out. Okay, actually, let me see if I can do this. I'm going to go stock indices. Okay, so, excuse me. Check this out. So this is not yet updated, but it will be in just a moment. Today's forecasted is actually going to be 2.8% because that was what is showing currently is the previous GDP number. This number has not yet updated in the Edge Finder. It will automatically do so shortly. This is actually going to change scoring on the Edge Finder more bullish for stocks because look at this. We're going to go from, and actually more bearish for gold, by the way. I'll show you that in a second. So the forecast today, the updated numbers will be 2.8 versus 2.8. That puts us at a 0 change, and it changes this GDP score from a -1 from the previous number to a 0, which actually bumps this score up to +7 for stocks. So we're looking real good. S&P 500 getting a +7 for stocks once this data updates. And we can do the same experiment with gold. You can see currently the weaker than expected GDP numbers that we got last time around at 2.8 compared to forecast are now going to go to 0. And that's going to take the GDP score here from a +1 to a 0, meaning the score will be +2. So we're watching the scores here. We know that's coming. That doesn't really put us in territory to go long or short gold here based on this idea from the fundamental side. But I just like to break down how that scoring functions. That will usually update within 5, 10, 15 minutes max on the Edge Finders data once it pulls in the latest GDP numbers. But something to think about here as we look at the current top setups. Let's actually just filter out the neutrals for a moment. This is what I'm working with. We've got bearish readings on dollar yen, which I think is interesting. COT data seems to favor selling dollar, buying yen right now. NASDAQ getting a bullish reading, DAX and S&P. So we're getting some indices bullish readings. Let's go just take a quick look at what is happening on the stock market front in reaction to this. So you've got gold slightly higher here, not by much. NASDAQ sitting around just under 21,000 here. S&P 500 is probably the one I actually like more right now with a more positive score on the Edge Finder. Would be looking for something like a break and retest on this one. I've talked about that yesterday. Or alternatively, if we do get a pullback, I'd also be an interested buyer at these levels, given that we still have a bullish confirmation from the Edge Finder. I've got to have both the technical setup as well as a confirmation from the scanner, right? I want the data to kind of confirm my theory, but with it going up to a +7 shortly, I'll take that. That's actually a really good potential kind of idea. So watching that close, we've got a couple indices on top here. Let's take a look at dollar yen. I'm curious about that idea. USD/JPY. From a technical perspective, look at this. Dollar yen potentially, did we get a trend flip on that? Is that, yes, it is. Dollar yen spotted a trend flip in the Edge Finder, which is contributing to the bearish reading. Interesting. Yesterday I put out a chart. This looks kind of silly for me now. Yesterday I put a chart out. How I thought this chart looked pretty bullish, but I didn't touch it, right? I didn't take any trades because I don't have the Edge Finder's confirmation. And sure enough, we actually are breaking through some key levels here. Let's watch to see if 151.5 breaks. Could be an interesting actual break and retest here. And dollar yen might actually be a play for me. Also, guys, Bitcoin, I did get stopped out of Bitcoin, and it might make me feel like an idiot pretty soon. It may just go running right on up to 100K without me. And if it happens, it happens. I have a rule set that I follow, and sometimes those rules don't help me out, but a lot of times they do really help me out. I mean, had I taken profits on Bitcoin and today it was down 3 or 4%, I'd feel really smart. But if Bitcoin just flies through the highs, will I feel a little annoyed? Admittedly, yes. I did stop out. I did take profits. So my initial entry was around 70,000. I took profits around 91.5. I'm happy with that move. And at the end of the day, I'm not investing in Bitcoin. I'm trading it. And I was looking for this to have a pretty quick snapback. It tried, started to fail, looked like it was going to continue lower. So I stopped out. Unfortunately, sometimes what will happen is I will get stopped out and then the market will go on without me. It happens. It is never fun when it does happen, but it is something that just happens sometimes. Other times I get trailed out and the market just tanks and I feel really, glad that I put a stop where it was. That being said, I've had a couple annoying trades here recently. However, I think, did we get a bounce back on? Yeah, we did. We are back. We are back to break even, guys, on the Hang Seng Index trade that I took. Bit of a contrarian play, bit of a like not a short-term trade by any means, because this is a risk here of about 5.6% in terms of price movement. So more of a swing trade for sure. But I bought this Hang Seng index. What I actually bought, by the way, is MCHI, which is an ETF that tracks it. But it started out real poorly, right? But we'll see where this one goes. I mean, I have a stop loss where I felt was comfortable to me. It's not a huge position for me. And I'm looking to see if we can actually start to potentially have this one big 61.8% retracement retest that does continue this stimulus idea from China. May be a great idea, may not be, but I liked the setup. I like the risk to reward to this one, and I'll stick with it. If I get stopped out, I get stopped out. Gold really just trading between a range, not super interested in it where it currently sits, but we'll continue to watch it. I added Dogecoin to my watch list, Ethereum as well. Look at Ethereum today, going up 5%. That's pretty incredible. Dollar index also coming down here a little bit. Let's keep an eye on this one. Dollar went up and tested this 107 range, 107.50 range, came back down. And now the question is, are we just retesting key support again? Or is this truly going to break to the downside? Like, are we going to just scoop these lows and then head back up again? Or is this going to break structure and reverse lower? And I'll tell you this, I think where GDP numbers came in, 2.8%, unemployment claims still relatively low. I feel like the dollar still looks good. And actually this pullback looks interesting to me. I'm just not quite getting any setups on the Edge Finder at this time for dollar setups. In fact, what I could do is if I scan for major currency pairs, I only get dollar yen bearish setups, which I think is interesting. Mentioned it earlier, but don't miss it. We're currently doing our 45% off sale. If you just tuned into the stream, this is ending soon. Our Black Friday sale for the Edge Finder. And just a heads up, it is the lowest discount that we do all year long. I guess the lowest price, the biggest discount that we do all year long. If you have not picked up a copy and you would like one, we'll drop a link here in the chat like we did earlier. But for those who are just tuning in, click that link. Let us know you're interested in getting access to the Edge Finder for the Black Friday discount. And if you're watching the live stream, you get an extra 5% off. So we're usually doing 40%, but for live stream viewers right now who message us, you can currently get 45%. So don't miss that offer. It is ending very soon with Black Friday right around the corner here. There's your chance. And let's take a look at some sentiment. Let's look in terms of retail sentiment, which I just added this new page, and I actually really love this. If we take a look at euro dollar, pretty back to neutral now. And I think this is interesting, right? When we look at euro dollar, now that we've actually gotten a bit of a bounce, you can see retail traders are already kind of back into neutral territory. They were really, really long for a long, long time, right? Heavy preference towards long side action for euro dollar on the way down. And then now that it's actually getting a little bit of a bump, we see retail traders getting more neutral. And if it keeps going up, what's probably going to happen, as always, is retail traders will start to short the rally. They'll start to go against it. And sometimes that can actually produce a great true reversal to the upside. So we'll keep an eye on this. But retail sentiment's one that I really like to look at. And we can select anything. We've just talked about the Japanese yen. Let's look at USD JPY here for a second. Let's just pull that chart up. So if we look at dollar yen, so dollar yen, interesting. It's pretty mixed right now. We don't see any extreme readings. And by the way, we take an extreme reading to be above 60 in either direction. So if everybody is, significantly long or significantly short, we call it a 60-40 split. And you can actually see dollar yen's really been pretty mixed for quite some time. We don't really have a clear, decisive side on that. Let's take a look at pound dollar for the currency traders. Let's look at this, pound US dollar. Little bit of an extreme here to the long side for a little bit there, but now moderating back a little bit. But still, retail traders seem very long on pound dollar, which makes me a little nervous, right? You get all the retail traders are piling in longs. So that makes me think that, there's a greater potential for a swing back down hard. And that's just a theme that we've seen over and over. Trends typically keep trending, and a lot of times retail traders are on the wrong side of that trend. So we'll keep tabs on that. But this new historical retail sentiment, we just added it. If you already have the Edge Finder, it's under sentiment and positioning, retail sentiment history. We just added that this week, actually. Quick look at the put call ratio. Starting to get a little bit frothy here. It does make me a bit nervous when we see, no demand for puts out there and just all demand for calls. When this number gets lower, by the way, guys, what that's telling you is a huge demand for calls is out there. And when this number gets really high, a huge demand for puts or bearish bets on the options market exist. So I do like to keep an eye when it starts to get extreme. And we're kind of close to that extreme kind of reading on this put call ratio. So it makes me a bit nervous. And if I'm being, transparent about my current positioning, I have longs on SMH, right, which is not going well. So if this thing breaks the lows, that's going to be it for me. I'll just take a loss on SMH, which is the semiconductor industry ETF. So I'm watching that. And then I'm also watching some healthcare stocks. Let's see, in terms of, stock market's not yet open, but any interesting pre-market moves? I did sell puts on ExxonMobil, so I want Exxon to go up, preferably. The Dow Jones looking decently strong here out the gate. Gold's up 0.75%. And I really don't have a strong directional push on gold at this time. I know everybody wants to talk about gold, but there are just times to trade things and there's just times to not trade things. There was a stretch of time where I was not trading indices at all and trading only gold. And now recently, I just have no interest in trading gold because of how indecisive this price action has been. I mean, look at this. Huge move down, huge move up, big move down, immediate buyers come in. There's no continuity like we saw over here, where you were just seeing consolidation, big breakout, consolidation, big breakout, consolidation, big breakout. There was just a much more clean, clear directional bias for gold. And you had just a number of really great catalysts that made a lot of sense to be bullish. We discussed those at the beginning of the stream, so I'm not going to repeat myself. So you can rewind the stream if you want to go hear about gold. I did a breakdown this morning on it. Same thing with silver. Just lost its mojo for now. And it doesn't mean that it's over forever. These things could have big up moves in 2025 if you get some new catalyst that really builds for it, but not loving the setup right now. Chinese stocks bouncing back here, which is great because, again, I have a small position long on there. I have a lot of cash right now too. I'm very much poised for a correction if it does happen. And if it doesn't happen, then oh well. Bitcoin, I'm probably not interested in jumping right back into Bitcoin. I know it's, in terms of crowd sentiment, it's crypto season. We're back, baby. And I do still think crypto could go up, but my rules told me to get out of there. And I'll go over my crypto trade just for a second here. So if I go, let's just add Bitcoin for a second. Let's look at Bitcoin. So Bitcoin score. Yes, we do score Bitcoin. We don't score anything else yet. We just do Bitcoin because it is the kind of the easiest one for us to plug into our Edge Finder algorithm system, right? So score is only +1. COT data doesn't look super promising. And yes, there is actually COT data for Bitcoin. I don't know if you guys knew this, but you can actually pull up the commitment of traders data, and there is in fact Bitcoin futures. So pretty mixed on the Bitcoin futures front. And so if I'm looking at this, I'm kind of feeling, okay, well, we're mixed on that front. And then in the latest report, let's see, where's Bitcoin? Let's actually look at this. This is interesting. So on the Bitcoin front, you would expect to see, with all that recent massive up movement in the price of Bitcoin, you would expect, I would think, to see massive accumulation. But what we actually see is that they increased short contracts more than they increased long contracts. There was more interest. There was an increase in open interest in Bitcoin overall. But what I thought was interesting is that when we look at institutional money flows on the price of Bitcoin, as reported by the CFTC's Commitment of Traders report, we saw long contracts trade up a little bit. They added longs, but they added just about 2 times the number of shorts. So more short volume, interestingly enough. So I'm not bearish on Bitcoin. I think it can keep going. However, I'm a bit cautious because, again, the retail crowd is fully, full porting into Bitcoin and Dogecoin and all that stuff right now. And that makes me a little bit nervous. I bought Bitcoin, I don't want to say before it was cool because it was still at 70,000, but it was in a long-term range. And some of you guys will remember if you were watching streams during that time, you had this kind of corrective move for months and months and months, finally started to break out. The pullback happened and I went long. I lost my first attempt and then I tried again and that was the one. So the second attempt worked much better and I was able to make some really good money, but it kind of felt like I got in before it was cool, right? Because it was just range bound on like a multi-year basis. Got in, caught the breakout, and now I'm going to walk away with my money before, what happens next. I don't know what happens next. Bitcoin could go right to 120,000, but I want to reiterate, I said something yesterday on stream that I want to say again. I'm not married to any price or idea. I'm not long-term, all-in, diamond hands investing in Bitcoin. I am a trader. I trade the setup that I trade over and over and over. I liked the setup post-election, but I think that the easiest trade is now behind us. I don't know that we rip to 150K. We might go back down to 70 or 60 before that. I don't know. But right now, I don't have the confirmation that I need to really keep going. Let me also just double check that we are, we are ready to go with our next guests here. And sorry for the delay on that. We got Miko coming in and then Kenzo's at 9:15. I saw Kenzo is in the backstage. So we'll let Miko take over here. Kenzo's on in just a little bit longer, that 9:15. So Kenzo, you might be here a little too early. I may be wrong on that, but James and Chandler can correct me if needed. Okay, guys, we're going to take a quick break and then Miko's taking over the show. Before I go, remember, Black Friday sale is ending soon. Take advantage of the 45% off discount. You get access to our VIP group, Edge Finder, Stockbox, and so much more. Everything is on super sale. Click the link being dropped in the chat right now if you're interested in getting access to anything we've got. Biggest sale of the year. Stay tuned. We'll be right back with Miko taking over the show.
Our Black Friday sale is almost over. This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stockbox, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stockbox gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stockbox, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. Again, the sale is almost over. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Okay, what's up, people? Welcome. Glad to be back. Hope everyone is doing well. As always, guys, any markets you're looking at, any ideas, any conversations, or any thoughts you want to share, just drop it down in the chat and we can discuss. But I'll go through the markets which I'm looking at, which I'm concentrated on. And that's more or less with JPY. I will go over USD as well, because of course that's interesting. We just had some news, we're seeing some momentum. But JPYs are kind of stealing the show a little bit. I'm currently short on CAD-GM, which I'm riding from last week. We have finally seen some momentum with this one. I have closed some of my position once we did break through that low there. But I really do think that the yen pairs have got so much downside in the tank. So I'm looking to see if I can get into additional positions, especially in CAD yen on the retest of this low here. So that's really where my focus is. Of course, we've just had the breakout, so it might be maybe 2 or 3 days before we do get that retest, but that is where I am looking to find opportunities. And really for all the other yen pairs, it's the same story really. Of course, with the yen pairs, they all kind of do their thing together. So it doesn't really matter which yen pair you're trading, because they're all going to make that move down or make that move up, maybe at different speeds. But this is euro yen, really big move to the downside. The key thing, what I'm looking at for the yen pairs, is that drop in July. If we go to the daily chart, see a bit better. So this is euro yen, really big drop in July there. And basically what I'm looking at is this move to the upside is the correction of that. And now possibly we're seeing the continuation. And if that is the continuation, if we are seeing that trend, that impulse continue, there's a good chance we're coming right back to these lows and maybe a lot further as well. Maybe these are some potential tops there for the yen pairs. I've looked at the higher time frames and we're trading at some really interesting prices for a lot of the yen pairs, euro yen in particular. You can see we're trading at some really big highs here. Last time we pinched a high, we had a really big sell-off. This was back in 2008. And of course, that caused a really big move to the downside. But hey, history repeats itself. We're in an interesting area again. Lovely rally to the upside. This could be time for some downside there in euro yen. And there's a massive high here as well, which could come back and retest. So I think there's a lot of downside in the tank, and then dropping to the lower time frame, because of course, we're not really looking to trade the weekly or the monthly, or at least I know a lot of people aren't. But on some pullbacks, it becomes very interesting. We're very consistent with the lower lows and lower highs here. And I would be looking to trade euro yen if I wasn't trading CAD yen, but since that's the one I got my trade on, I'm more focused on that one. But euro yen, very consistent with the lower highs as well. Also printed another one just shortly there as well. As long as price doesn't see anything crazy in terms of a big move breaking structure, that would keep me bearish in euro yen and keep looking to attack those lower highs. So I do like the opportunity of a retest of the low here for some shorts, even the retest of this low. However, I would wait for price to give me a bigger breakout. I'm not really a big fan of shallow break and retest, like big breaks and then big pullbacks. That's normally the break and retest opportunities I'm after. So I do want to see price give me a bigger move down before I would look for a pullback. And either one of those areas look pretty attractive for some shorts. And as I said, I think there's a lot of downside to be had. Yeah, at least a push to these lows if we are seeing the continuation of that drop in July. And of course, if I quickly go back to CAD yen, that's essentially what we're seeing as well with CAD yen. Really big move in July. This to me just looks like the pullback of that move, the correction of that move, and now possibly we're seeing the continuation of that. So expecting a push down to the lows, and I'll just be looking to trail my stop loss behind the position. I don't have a take profit down there, but if I can trail, this is where my stop loss is trailed to at the moment. And I'll see if I can find some additional entries there as well. If we take a look at pound yen, that's having a massive drop as well. It's the same story. Jump to the daily chart, big drop in July. This looks to me like the correction of that move. So again, if you can find some intraday, intra-week pullbacks, could be finding some really nice opportunities maybe later this week or early next week. I like the retest of the low here. Again, you can see the successive lower highs market's been printing. 1, 2, 3, 4, could be seeing another one around 194. That's a healthy place for a correction and possibly the continuation. And of course, dollar yen has made a big sell-off to the downside as well. Really big move the past 24 hours here, breaking through structure. This swing low is quite important because this swing low gave us a really big rally to the upside here. As you can see, price has just gone and broken through that. So now I would be bearish in dollar yen, and we've left behind some healthy structure for a retest with that trend line confluence, also retesting some prior support. This will be turn resistance. If dollar yen would be kind enough to see some upside to retest that area, I think that's a really nice place for a short, 153.5. Again, looking for that third lower high, first, second, and of course, this will be an area for a third. And again, this one has a lot of room to drop as well. If it is going to, if this is a big impulse, if that is the pullback of it. I'm asking a lot there for dollar yen. A big push that low is a long, long way to go. And, we're not looking to trade that in one go. But, hey, if you had a trading stop loss, who knows how far you could take that trade. Could be onto a really big winner. And that's the beauty of of trading stops. You just don't know how far the trade could go. It could be a small winner or it could be a very large one. And yeah, pullbacks in dollar yen look really good. Price has been quite corrective. We've broken out of this trend line here as well. So since we've seen that momentum there, dollar yen to me looks like a really nice short. And I would be concentrating at that 153.5 area. We'll go through some USD markets. I'll take a look at NAS and we'll go through Euro USD as well. So with NAS 100, this one has this one's been slowly pushing to the upside and grinding high. I'm not the biggest fan of that type of price action, especially when we had such a big drop not long ago. Now we're having this corrective nature here. This doesn't give me a lot of confidence to buy NAS or look for pullbacks. Generally speaking, I'm really bullish on the market structure on the daily, weekly chart. Again, consistent higher highs and higher lows. We're definitely in a bullish climate here. So definitely as a swing trader, predominantly you're looking for buys. If you're looking for sells, you want to be in and out, really not look to hold those positions too long, because the market is more than likely going to keep pushing high. And I do think we'll see some new highs. But the area which I do like NAS 100 would be actually another push lower. I was talking a lot about this setup a couple weeks ago when we had that big drop. I was looking for the test of 2100. You can see a brief consolidation here, really big move to the upside. I would like a test of that area. And if you were to go for another sell, so for example, impulse correction, another impulse, I think this could be a really nice buy to swing and take it back to the highs. But of course, it's a waiting game. Will NAS make that move potentially? If it does, I would be interested. If not, maybe we just slowly push to the upside and slowly grind higher. But like I said, because it's so corrective, it doesn't give me a lot of confidence to jump in any buys there. Maybe intraday, if I drop to the hourly chart, let's say if we get a pullback into the prior low, that could be a nice place for a buy, because you would expect price to hold that support. If it starts breaking through, we're probably not going to continue in that bullish structure anymore. So this looks like a nice place for a buy. Again, because it's so corrective, I wouldn't personally trade it, but we might not see that bigger move. So this might be the only best opportunity to find that buy. And of course, just basically continuing with those high lows there. So NAS 100, very bullish, only really looking for buying opportunities. This is where I would look for a buy. And then, I'll be expecting new highs afterwards. In terms of Euro USD, I'm expecting upside for the USD pairs. They're very, very stretched. We're seeing some momentum today. It looks pretty bullish, but I do think there is a lot of upside in the tank, because the key thing is with the USD markets, Euro USD, and I'll get onto the DXY in a second, but we had such a big drop the past couple of weeks, and we've come back into such a crucial low here. And last week's candle did just about close below, but it's not a convincing close. It's not a confident close where I would say, okay, we're breaking out, and don't worry, if we do get a confident breakout, I'll be looking for a push all the way down to that low there, 0.97. So if that's the case, I'll be very short biased. But we didn't do that. It was a very weak close, left the wick behind. So I'm looking at potentially some inverse head and shoulder patterns forming here on the lower time frames. We just had the 4H close there, a really nice close to the upside. Momentum is definitely coming back. So what I want to see is a break of structure here, because although it's a nice place for a buy, you have to be careful. The market's still very bearish, and we could really drop through the floor. So it's very important to wait for the market to make a sign that we are about to shift. And a break of structure is one of the best ways to do that. If we can take out the high there, that's evidence that resistance is no longer holding. Buyers are stepping into the market, and maybe we're seeing a lot of sellers exit their trades with taking profits at a low. Which would make a lot of sense of where we'll come into. So if we could see something like that happen, that would be great. Then looking for the correction of that. And of course, that will give you your left, your head, and your right shoulder for your inverse head and shoulder pattern. So I do like the buys here for Euro. I think if we can get that break of structure, the retest, see that higher low, I think that's a really nice trade. Again, probably for next week at this rate, because if we're looking for the break of structure there, that might take the rest of today. Then we do have Thanksgiving tomorrow, and Friday market might be a bit dry as well. So we might not do all of that before Friday. So this could be a nice setup to keep an eye on for next week. But I do think there's upside potential for Euro. I like the low here as a target, and I also like the low here as a target as well to keep an eye on. If I quickly go over to the DXY and just get the general kind of consensus for USD. Wow, look at USD there. USD is not looking good. at least for the buyers anyway, it's looking pretty bearish. So yeah, it looks like price is really struggling to break through this resistance then. And again, it's a similar situation to Euro, which we just spoke about. We did just about get a close above this high last week, but again, not convincing. Only just by a little bit of a candle closure, and I left behind a pretty big wick too. So I said last week on my streams on my channel that I want to see another strong bullish close to the upside to give me the confidence that, okay, we are breaking through and this is not potentially a fake out. And yet we're looking very bearish at the moment. So I just mentioned the inverse head and shoulder on Euro. Well, this looks like a head and shoulder pattern on USD. And of course, you do tend to see the opposites between those two pairs because of being inversely correlated. But this is like a nice opportunity. It looks like we are getting a break of structure here. So to me, especially with the momentum here, breaking the low, I mean, this candle still does have 2 hours left before it does close. So I would wait for that because we could pull back and leave a wick and then it doesn't become as good of an opportunity because we don't have the break of structure. I want to see price close above highs or close below lows. So I would wait the 2 hours before that candle does close. But if it does close similar to how it's looking now, we've got the break of structure, I would be looking at a pullback and a drop there. Of course, similar situation there for Euro as well, just the pullback and the continuation up. But it looks to me that USD is rejecting 107. So let me drop back to the 4 hour actually. So I would be looking at a push back to this area for USD. I think that's a healthy place. We're not asking for too much. I mean, we really could sell from here because last time we were here, massive drop to the downside. So we could see something similar, but I think let's just take it step by step. So a push back to 105,300 looks good, and also a push to 104,600 as well. Reasonable targets for USD there as well. And of course, you've got your head and shoulder there. Start to shape up nicely. So yeah, I'm pretty bearish in USD because of course of where we're trading, especially as a swing trader. It doesn't make too much sense me being bullish at these prices. If we break through, that's a different question, but haven't got a solid break. So it looks like we might be seeing a bit more weakness for USD, and of course that will mean pairs like pound USD as well might retrace. Now I'm still pretty bearish on pound, and I'm actually waiting for an opportunity to sell this one. I was actually looking for a trade over here last week, but we just never had that retracement. Unfortunately, the market was just way too bearish. But if we can get a bigger retracement, I do like the looks of 1.285. Nice level of support in the 4 hour, healthy breakout. Never had the retest of that zone. So if price was to get back up there, I would be considering that as a nice place for a short. Again, looking at the daily chart, pound USD is broken through a lot of structure here. So there's a lot of evidence that the buyers aren't really holding price very well. Still think there's a bit more downside on the cards for pound USD. If I quickly jump to the weekly chart, actually, we have broke through a pretty long-term trend line as well with last week's candle closure. So as you can see, we did break through that trend line too. So another sign that the sellers are pretty strong still. Buyers are not doing their job very well. So if we can retrace a healthy amount, I would like to sell pound USD at those areas. Stops above, of course, and hopefully I swing back to the low there. So that's something I'm eyeing up for pound, but again, probably not going to speak too much on until next week. In terms of like gold and silver, it's been interesting with these ones, I must admit. We've had some really big drops to the downside, and it did actually put me off, well, not put me off, throw me off, I should say, because this week I was looking to buy gold, and specifically I was looking to buy gold from this area here, but we broke through that. Looks like we're holding on to this low pretty well. But yeah, I wasn't expecting such a big drop because price broke structure, which shifted me from bearish to bullish on gold. And I was looking for the high low to form for a push back up, and I still am looking at a similar move, but not so much anymore. The quality of the trade has definitely dropped, and it's just not looking as good anymore. But maybe a double bottom could look good. It depends how we get there, depends how we react. But the setup I was interested in this week didn't set up for me. So really that just makes me a bit more neutral on gold. But in terms of market structure, I'm basically looking for the impulse here, correction and impulse. So that is my plan there with gold. And I'm looking at something similar on silver as well. In fact, I was buying silver last week, but I did get trailed out at break even this week here. I mean, I did secure some partial profits, but it did come back and take me at break even there around 30.18. I'm bullish from silver. Again, the high time frame trend with gold and silver still to the upside, still momentum there on the higher time frames, particularly the weekly, monthly charts still pushing up. So overall, I do think higher prices for both of them are likely. It's just about timing and timing the entries well. There was a big level here for silver, and this is the level I was targeting. I would actually want to see price break above this, and that's when I'll start to look to find some more entries on silver again to see if I can find some longs. Again, we're still forming these higher highs and higher lows, still respecting structure well, but it's began quite choppy now, and I'm not seeing much bullish momentum anymore. So if we can get back above this level at 32.5, I think the longs will look really, really good above that, and a push to the highs where we're expecting price to move towards. What's up, Jules? Hope you're doing good. Okay, I'll go through some more USD pairs. We went through pound USD. I'll go through Aussie dollar, and then I'll take a look at US 30 and S&P 500 as well. So quick look at Aussie, and then we'll go through some indices. So Aussie dollar, similar situation as the other USD pairs. You had a big drop to the downside. I'm still not looking to anticipate buys yet with this one. Of course, if USD is going to be strong, then Aussie dollar is most likely going to push up. But in terms of the technicals, 0.64 is such a big level, and I would expect price to go and hit that area before we do see some upside. So I would be looking at a little bit more downside for Aussie dollar. 0.64 is the area I'm looking for a bounce. Early in the week, I was talking about some shorts on the retest of this low, which we did see a nice move. Hasn't really properly got going yet. It's kind of stuck at support here a little bit, but it's a nice retest there for a short. And now we're kind of just consolidating, really. So I'm not the biggest fan of Aussie dollar's price action anymore. Until we get back down to 0.64, I'm not really looking to get involved. If we can see some nice double bottoms here, a nice break of structure, I think that'll be a nice place to look for some long opportunities, because I do think the USD pairs are due a bounce. Been falling for quite a while now, haven't seen much retracement. In fact, the market has just been ranging between highs and lows. So naturally, as we approach support, I do think we can see a nice bounce and a push higher up. If we go take a look at US 30, so US 30, I am pretty bullish on as well. As you can see, the market's still making higher highs and higher lows. So pretty difficult to be bearish on for me, following market structure. But because we've just created new all-time highs, there's not much I would do now with US 30. For me, it's time to retrace. I didn't think, did we fill the gap there completely? I don't think we did. We just spiked into it a little bit, but didn't completely fill. So that's probably another reason why we could see a bit of retracement before the end of the week. But yeah, US 30, creating new all-time highs, great. Conditions are still very bullish, as we just looked at in the daily chart. But I would want to see a bit of a pullback now, and that will be the opportunity to look for the next buy for US 30. So I like this area here, nice consolidation. What started this move to the upside, that would be a nice area for a buy. Even this area here too, brief pause in the market and a nice push up as well. I think those two areas will look good. That way we can go fill the gap as well, and then possibly see that next bullish leg. If I do get the Fibonacci from the low to the high, well, from the current high, we might push up a little bit higher, but from the current high, 0.5, 0.618, 0.786 in those areas. So healthy pullbacks there for US 30. So still 100% bullish, but these are the areas I'd be looking to get long on. Yeah, the market's very bullish, but because it's at new all-time highs, I wouldn't be looking to buy now. Of course, we don't know. Maybe we still see another big move to the upside, but yeah, I wouldn't want to buy at those prices. If you can pull back, that'll be great. Then yeah, I would expect more upside. And of course, if we take a look at the S&P 500, excuse me, I think this one just about creating new highs. Yep, just about creating new highs. So again, with S&P, I'll wait for a bigger pullback for this one. This one's a bit more tricky because I don't really have a clear-cut area which I'd buy from. US 30 price action looked a little bit tidier, so I like the price action there. We're just coming off the back of a nice breaking retest of the high. So really, The only setup which ticks my boxes would be another breaking retest at the high, really. Unless we're to come, oh, did not mean to do that. Unless we're to come back into the low, then that could be something that could look good. So basically back into that low there again. Basically, as long as we don't break the low here, I would still retain that bullish bias with with S&P, and look to take it higher. But overall, the indices are still very bullish. Hey, what's up, Nenad? Welcome to the stream. Hope you're well. So yeah, overall, very bullish for the S&P, for the indices, still seeing higher highs and higher lows. So I think price is just going to keep pushing to the upside. What's up, Lim? Hope you're doing good. So yeah, indices very bullish. I'll be only looking at pullbacks. Yeah, because the market's already had its fun. But overall, I do think it's time to see a bit of a drop. And of course, you got Bitcoin, which has been doing crazy stuff last time since I was on the stream. I believe last time I was on Nick's channel. I think we were trading back over here, maybe. I can't remember. But we're talking about 100K, and price just missed that. How funny is that? Because we're at 99.8K or something like that, and just missed 100K before price does dump. But I still think high prices are likely with Bitcoin, despite the momentum we've had here. So I do think we can find support and push up. It's a bit awkward now, but overall, structure still to the upside, momentum still up, even though it's dropped a little bit. I like this range here, and I do think if Bitcoin can find support here, we can actually use this to then continue back to 100K and maybe push on. And who knows how far Bitcoin can go. The way I look at it is just in terms of momentum, really, because you got your choppy periods and you got your momentum periods. Right now, we're still in momentum. I know we've had a bit of a strong close in the daily chart. But again, if you look at previous swings, we've had strong closes before, and the market is still ripped to the upside as well. So the way I see it, it's just a bit of a pause for price to keep going until proven otherwise, of course. If we see some heavy momentum going down, that will change. That will change my opinion of it 100%. But a couple of bearish candles, especially coming back into some areas we just mentioned, I do think Bitcoin can continue to push on there. So overall, still pretty bullish on Bitcoin. Still think higher prices are there. Quick look at Ethereum as well. I think that's doing its thing. Yeah, Ethereum is looking pretty bullish. Ethereum does have some resistance to watch out for, because of course Bitcoin's at all-time highs. Ethereum's not. Ethereum's still got some structure here. Ethereum's like Bitcoin maybe about a couple of weeks ago. Bitcoin was moving in that channel, eventually broke out. Now Ethereum's moving in the channel, testing the high. Maybe Ethereum's going to eventually break out now, but if we can see some momentum above this, then maybe Ethereum could be on to a really big move. And even if we see that, we're still nowhere near all-time highs. We still got to get to around almost 5K before that becomes a thing. But yeah, crypto still looking very bullish. Momentum looks good, and I think we can push on. But my main focus will be with the yen pairs, seeing if we can take advantage of some more shorts. Yen looks pretty strong to me. So yeah, additional opportunities look pretty good. But have to stay patient there because need a pullback first. But I'll only focus on CAD yen. Other yen pairs, not so much. But yeah, I believe I've come to the end of my segment. I believe someone else is coming onto the stream, if I'm not mistaken. But yeah, appreciate you guys having me and connecting with some of you guys. I'm pretty sure, yeah, Nick and the team have dropped my information there. So if you want to check out my channel, feel free to go and check it out, and say hi as well.
Get over here. Come here. A little closer. Come here. Gotcha.
Okay, good day. I hope you are doing great. So I will be going through the market. So the best thing that you can do, just make sure that you let me know which pairs do you want me to go through. Then I will be going through them one by one. But at the moment, I will try to go through everything that I have at the moment. I will start with DXY, going straight to gold, US30, and NASDAQ 100. And then I will be going through everything after. So I can see UK 100, Euro USD, and stuff. So yeah, I will be going through that. So, but at the moment, you can easily see that, you know what, we are on a dollar index on a daily time frame. So we just had PCE, jobless claims and GDP. It seems like actually we have a weaker dollar. And even though it seems to be weak, we are still above our resistance area. So maybe the market would just want to respect this level and to push the upside. So this shows us that the dollar against Europe, JPY, Canada, it's still very strong. So which means if you check those pairs, just know that we're dealing with the stronger dollar, right? So I think this is easy, straightforward. So I will be going through everything. So USD JPY. Hi guys, I can see on the comments, everyone saying hi. So I will be going through everything that you say I should go. So firstly, I think I saw UK 100, but I did not really add that on my list. So which means I will still check that, but for now I can go through a USD JPY, right? Or first thing first, let me just go through what I have here, like gold, USD, NASDAQ, then I can go through the list, you see. So at the moment we are on gold. So gold is trying to recover, guys. So gold is trying to recover, which is very good for now, but we know very well that it might reverse along the way. So we come in from a very strong uptrend, but at the moment it seems like the market is trying to reverse again, you see. But what we have here, we can see that the market actually broke out here and the market retested. Let me zoom that first so that you can see nicely. So we have something like this. So this was a proper support. So this was the first breakout there. The market came back and retested around the same level. Then few weeks later, the market came back and retested. So this shows us that this is a proper area that we can call actually a resistance. So at the moment, we can see that even though we see that the market broke out and we expect the market to continue going down, with this type of a sell, I think the market will have to recover. And the market did that. You can see that this was a proper move. And then after the market gave us a proper sell again, but it seems like the market will just be playing around here. But there are reasons behind that. We have geopolitics, let's say tensions in the Middle East, another one, Russia and Ukraine, which shows that tensions are getting escalated, and that might push gold to go even higher, you see. And another thing is, as we know that most of the economic events that we have, that we see here, it shows us that, you know what, it is possible that you as a Federal Reserve, they might not really cut the rates. It seems like inflation is still bouncing back, and that is not really good for the dollar. That it's not really good because now it seems like the rates are going to stay higher for longer, and that's why we see the XY going up, and it's not really nice. You see, it's not really nice because US has to pay an extra interest rates to their bonds, so that is not really good. Yes, the dollar might seem to be stronger, but that is not really good. But on gold here, we can easily see that yes, the market seems to be trying to give us a new structure. So which means we might see the market going like that, and this might be a level that we can try to look at. But at the moment, I'm just looking for a smaller buy until we reach this level, then maybe we can actually go lower. But besides that, I can say at the moment, it's not really a very nice area just to hold gold, because I think reversals there might be along the way. Even though I'm buying here, I'm still expecting a nice reversal, you see. So let's check the other one, which is going to be US30. US30. So on US30, we have a proper structure. guys. We have a quite simple, straightforward structure. So the market has been going up for quite some time. We know very well that companies performed very well. So we see something like that. And where we are, we can easily say the market actually is playing around our stronger resistant area. So there is a chance for the market to do what? To go lower. And if that happens, it means we can expect that to happen maybe for a week to have that aggressive sell. But if we go closer, you can see that we just broke this area. We can say the market is actually already giving us this area as a support. So since the market is very bullish, there is a chance that the market might play around here before we see another aggressive push. We might break this level. It's possible. Already the market tested this area several times, so there is a chance that the market can still break out of that. But if it fails, obviously we will see this type of a move, So those type of moves, they might repeat themselves. I hope you understand that. But at the moment, I think in the US, tomorrow is going to be Thanksgiving. That might actually delay these moves. We might have like a very slow moving market starting from tomorrow. So that won't be a very nice thing. So which means the best way to trade is going to be next week. So now we have something like this on NASDAQ. Before we go on other pairs, we can see that, yeah, the market has been going up very nice, but what we see here is the market is now trying to bounce back again. We had a proper reversal, so now the market is trying to cover that. I think the market will have to reach this area of resistance before we can say, okay, maybe the market might break out of that, or maybe the market might do the same thing as here. The market might still respect that and go even lower, you see. And I think maybe that will happen those times, maybe when they cut the rate or maybe when they pause with the rate. And if they pause, that won't be a very good thing because we're expecting the rates to go even lower. But with the news that we received along the way, they don't really look good. So which means, yeah, we just have to wait and see. But at the moment, I'm still pushing this as a nice bullish move. We've been going up slowly. At the end of the day, I think we will reach around 21,200, around that level. But at the moment, the market is just moving quite slower. So now I can just go straight to Euro USD, USD JPY, UK 100, and the other one. So let's see, USD JPY, let's see USD JPY, USD JPY. Whoa, this thing is selling. So on USD JPY, let's see this on a bigger time frame. We can easily see that we are coming from a very stronger bullish move. I think it's also good on 4 hours time frame. So this is aggressive bullish move. If you check this, we're coming from a very aggressive structure. And at the end of the day, we saw the market continuing going up. That was a very proper, straightforward bullish move. But at the moment, we can easily see that JPY is getting stronger and stronger. Unfortunately, I did not really get why. Maybe JPY, they increase their rates. Maybe it's possible. And it shows that, JPY is quite stronger against the dollar. Do you see that? On the other side, we saw DXY getting stronger, but it shows that even if the dollar is stronger, it's not really attractive as JPY. So it means JPY, it's way two times maybe stronger because we see this continuation of a sell. So what can we do when we have a structure like this? Obviously, we don't really have a proper reversal on this, but sometimes if maybe the sell is quite stronger, those proper reversals, they might not really be there. So which means we have to get smaller rejections, and once they continue, it's where we can jump on the market. But here, I think I see something like that. Around this level, it seems to be a previous structure that we can actually refer to. And if the market goes below that area, we can say, yes, we can continue selling. Or the market might try to bounce back, reach this area where the market broke out, and then the market might start to go even lower. I hope maybe that makes sense. Do you see that? So this can that move this area, the market, it's possible that the market can respect that. So if maybe the market doesn't really respect that, it means that we have to wait and see. Then maybe the market will continue going lower, or maybe the market might bounce back. And if it bounces back, we'll be expecting the market to respect that. So this breakout there is the one that we can check like now. But going back there, I think it might take time for the market to reach this resistance. You see. So let's see another one. YNS is lagging behind while S&P and Dow Jones touching all-time high. So remember that with these indices, they have different companies. And since they have different companies, it means like something like a NASDAQ, it means some of the companies might not really perform very well. And maybe those companies are not actually inside the NASDAQ basket. So that can be something that you should look at, because it's not like they are 100% the same. So they differ. S&P 500 is almost 500 companies. And S100 is 100 companies. US30 is 30 companies. So yes, we might have similar companies in those baskets or in those indices, but they actually differ. And the value of each company, they differ from index to indices, you see. So US30, Apple in US30 and Apple inside NASDAQ, the value is not really the same, even though it's quite big, but it's not really the same. So I hope maybe that makes sense. So let's check. I will check UK 100. Let me just go straight to UK 100. There is someone who asked for UK 100. UK index. I want the one. UK index. Let's see. UK. What's really happening? I used to trade this before, but sometimes it moves crazy. So I had to stop at this, because maybe it's because of the companies. I don't really know much UK, like seriously bigger companies, like the ones that are in the US. But yeah, it sometimes moves very nice. So at the moment, we can see that this trend seems to be, or it was going up. And I think the best way for us is to do what? Is to do the analysis. So firstly, we can see that from this area, the market was doing what? The market was going higher. Around this level, I see something like a ranging. It seems like the market is just ranging around the same level. But anyways, let's use proper tools, because sometimes you might be wrong by just trying to see. Let's see. I don't know if I'm forcing my, yeah, I think it's like that. I think but I'm not forcing this. Okay. I think it's good. So let's see. Yeah, I think it's not really bad. I think it's fine. It's just that this area, you can see this area here and this zone, the market was just ranging around the same level, and I think it's quite the same as this area. So the market, it's moving like that. Range, go up, range, go up. Very nice uptrend structure. I hope that makes sense. So I will go on GBP USD, don't worry. So I see that, yeah, the market is actually showing me that we are on that nice uptrend structure. Maybe what I can draw here, I think, stop my cam. Seems like my network is quite slow. So this is what I was going to do. Or let me just go on a daily time frame. Maybe this will be much better. So on a daily time frame, I will say you can see that the market is already a little bit higher or very closer to our resistance area. So what I can do here is for me to wait for the market to reach the lowest area before I jump on that buy. Or you can say if the market breaks that resistance, it's where you can start to jump in. You see that? But at the moment, we are on this zone where the market is just playing around the same level. So be extra careful. But the overall structure, yes, this is still an uptrend. So which means the overall move is still going up, even though at the moment the market is still playing games. So the market might still break, play games, something like this. Do you see that? I hope that makes sense. I hope that makes sense. GBP USD. Let me check GBP USD. GBP USD. Oh, GBP USD, I think I already done with this one. So on GBP USD, I think we are on the correction phase where the market actually, we can say it touched our support area. So, but it break this level here. But we can easily see that the market actually was respecting this level. So I think this is the lowest area that we can actually point out. And I think the market might continue to go even higher. We can see that the market did something like that. And we see these moves, they are quite big. Look at this move. It's quite big. Even this one was not really that bad, but this was aggressive. And at the moment, since this is an uptrend, it means we expect the market to go even higher. We expect the market to push like that before going down. So which means this can be a very proper buy, or let's say swing trade that you can actually buy and hold, something like that. I'm not saying go do something like that. I'm just saying I think it will be a proper move for us to hold this GBP order, as it shows us that it will recover very nice. It seems like my connection is very slow, or maybe it's this platform that we use. But at the moment, this is, for me, I think this is just straightforward. So another one is NZD, New Zealand and Canada. Let's see if maybe I'm not missing anything on top there. I did USD JPY. Euro USD. I think I have to do Euro USD before I do New Zealand CAD. Euro USD. So let's see. Let's go on Euro USD. So on Euro USD, we have a different structure, guys. We have a different structure. So let's see. We had a nice bullish move until we had everything crashing. So the dollar was quite strong, obviously. We saw the market breaking out of this level. We can see that this was a proper uptrend. Then the market broke out. So which means since we had this breakout, we never had a proper correction. The market was just going crazy. So at the moment, we just see this reversal here, but it's possible that the market might even reach this level before we see a proper continuation of that sell. But I think maybe the best thing that we can do is to go a little bit lower and see what's really happening. Let's see. After the breakout, I think this is another area that we can actually mark. So we have something like this. So I think, yeah, the market did not really give us a proper or aggressive reversal, but one way or another, it seems like the market is trying to give us some certain structures. You can see this point, we can say a potential support area. On top of there, maybe the market might bounce back around this level. Maybe we might have a nice play there, but at the moment, I can't say we have a clear move on Euro USD, unless if maybe the market reaches this area where the market firstly broke out, or maybe the market might just give us something that we can easily connect along the way. If maybe something like that happens, obviously we will have clue on what's really happening. But at the moment, we can easily see that we just saw a breakout, but we don't really have proper moves that we can use like immediately, you see. So because I also checked something like this, it seems like the market is breaking out there. So I think there is a lot of information on this chart. So the best thing that we can do is to just wait for this structure to mature. We just had a quick breakout, and then the best thing is to wait to see whatever that is going to happen so that we can have correct structures. Sometimes we rush to draw the lines, especially after the breakout. Sometimes you won't get that, or whatever that you get is going to be confusing. So it's better to wait a few days or even a week so that this chart can mature and you can get proper structures, because trends can last longer. You just check it, this one. We started from this area up to that point. If we check that, it was like November 2023 up to November like now. So that is almost a year. So which means if you follow this trend, it can last for 12 months. So which means you don't really have to rush here. Wait for it to mature before you jump in, because once you get it right, most likely you will be right for a very long time. So let me see another pair that you want me to check. Let me see another pair that you want me. Oh, New Zealand, Canada. Let's check New Zealand, Canada. You can just also throw some other pairs that you want me to check there. I will check them. Let's see. So if you see me checking them here, it's because I don't really follow them that much. So I just follow very, very few pairs. So, but I can still analyze them. So let's go. Let's see. Okay, New Zealand cat. Let's see. Seems like we were coming from a very proper downtrend structure. Okay, you can still see that we had something like that. But it seems like after that, we started to have a proper push. Just look at this. We had a proper push to the upside. Do you see that? So which means now we can say the market is slowly pushing to the upside, and we can actually draw that. So let's draw that very quick so that we can have some proper structures. So this one, I think, is no longer, doesn't really matter. We're no longer on that type of a structure. Let's remove that. Now we have this. So you can see that we have a slightly nice uptrend structure. It's not really that aggressive. Even if you try to draw on top there, you will see that the market is just moving like that. And if you missed it around this level, we can try to get something there. So let's try. Let's see. We have something like this. So let's see. So this is a proper push to the upside, very proper uptrend structure, quite smooth. So let's go on a bigger time frame, like a daily. I think you can still see this. But this, we have two ways to jump on this. If you missed it on the lowest area, I think the market also created a very smooth resistant line there that we can use and say, if maybe the market breaks out of that, we can also jump on top of there, you see. So let's try to draw that as quick as possible. Let's try to draw that, something like that. You see that? So which means if maybe, as we can see that the market actually respected this level for quite some time, from this level up to this point. So if you meet it here, wait for the market to be on top there, then we can see, yes, we'll be trying to go higher, maybe up to that point. I think that will actually make sense. So let's see, USD JPY has a key price support on 151, weekly can break. Oh, okay. So yeah, that's what I see on New Zealand, Canada. Any pair that you want me to check? Let's see. I don't think I see anything. So I will try to check what's really happening at the moment on gold and Nasdaq, because I actually check those pairs like non-stop. So let's go on 4 hours time frame. You can still let me know which pairs do you want me to check. I will check them. I think we left with 4 minutes, so I can check 1 or 2 pairs. So let's see. Yeah, it seems like gold is still trying to push the upside. And I don't know, what time is PCE, guys? Or we already had that. I think the news were already out, but I think we're still going to have this nice push to the upside. So US30 is still struggling, but we see a nice push towards this nice resistance here. So we'll see if maybe the market will try to break out of that, or maybe we'll get a nice reversal. So let's push to the next one and see. Okay, Nasdaq just went lower. So, and if you check here, it's exactly where we have our support area. So if maybe you were looking for a very nice buy, only if the market reverses there, obviously you can take this to go a little bit lower, but not actually on 4 hours time frame. You can check that. If maybe the market bounces back, then you have to be ready, because we can see that the market is been moving like that. So I think this area might be a very proper support area for Nasdaq to push to the upside. So let's push to the next one, which is actually YTI, or US oil. US oil has been playing around the same levels, guys. It's been playing around. Okay, I think it was around 4 on my side, and we already had that. Unfortunately, I did not really see that, but I think we already had the news. Maybe they were not really that bad. So US oil seems to be playing around the lowest levels there. You can see that the overall structure, it's actually a proper sell or a downtrend structure. But where we are, the market is just consolidating around the same level. I think this is because maybe we have some great news from Trump. Is still going to pump more oil and stuff like that. And this will make oil to be quite cheap. But it seems like the market is struggling to go below this 67, or let's say 60 something mark there. But if the market starts to continue going lower, that will be a good thing. But another good thing is when oil is going down, or when it's trending around the lowest levels, it's good for inflation. Inflation is going lower because transportation of those goods is getting cheaper. So which means, yeah, that's very nice, you see. So let's see if maybe we can have a German 40 around this. Let's see. German 40, yeah, German 40 actually is coming from an uptrend, but at the moment we are on that downtrend structure. So we can see that on top here we have this area, another one, we have another one there. So which means you can see that the market is actually going down on a bigger time frame, by the way. So you can see that we have a lot of those structures. So at the moment, if you missed it there, things still fine, but we still have a nice room until we reach the lowest area. Or maybe you can still wait for the market to touch your resistance again before you jump in. I think for that, it's actually enough for today. I think whatever that we have here, the market is not going to move that much, especially when tomorrow it's a holiday in the US. So I think maybe the market will start to be quite slower, especially towards later on. But this week, obviously, things were looking very good. But we will see. We will see. Next week is going to be a new month. Maybe NFP will change the outlook of this. And maybe also interest rates cuts, which are going to come around December. Maybe they will change all these moves that we have. But at the moment, things are still looking good on the stock markets. US30, Nasdaq, even though Nasdaq tried to go a little bit lower, but still, I think we still have a nice room to see some uptrend structures going to 2025. At the moment, I think we had our time is up, so we have to call it a day. So thank you very much.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The stock box, the Edge Finder, Pulver Alerts, and the VIP Discord community, as well as our trading view indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, Edge Finder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
Hello. How is everyone doing? Hope you're all having a great day halfway through the week. Let me just move that. There we go. Cool, good stuff. My name is James, professional G10 trader. Now and again, I'll touch commodities, but generally speaking, just G10. So far, doing pretty well in the portfolio. Like to show this when I come on stream, just give you guys, give myself some credibility, I guess. So in November, up 10%, almost. Need another 0.06%, which I'm working on. I want to get that 10% month locked in now. It's my new target. So you can see, currently short euro dollar yet again. Been shorting euro dollar for a long time. So if I put this on the daily time frame, you can see all of the trade history here. So I've been very, very active within euro dollar to the short side. Euro CAD, I showed this position yesterday. So I'll actually show you the original trade on euro CAD here. So this is the position. Was really impacted quite negatively when Trump announced 25% tariffs on Canada. But the overall bias for me hasn't changed. So I've scaled in again, looking for a continuation to the downside. Took profits on some of my scalings yesterday. You can see here, had to close one trade in a loss and then made up for it with 3 more shorts that will close down here, with obviously the original position still open. James, how are you? Can you please check gold and silver? It's the right time to take a buy or wait. First of all, I'd like to know why you want to buy gold and silver. That's the question I've got for you. Let me just put my chart back to how it was there. So I closed out of Swiss yen for about 1% this morning. That was quite a nice trade. Let me see if I've got it here actually. My position's gone, but yeah, this was the move I capitalized on, gained about 1% off that, which was quite nice. Now I'm in the Australian dollar, Canadian dollar to the long side, basically just the same thing, piggybacking off Morgan Stanley. This isn't my own trade, really, I guess you could say. So yeah, very simple stuff, just seeing how this one goes. We're currently bouncing off the 200 daily EMA as well. So that gives me quite a nice little confluence to go long, especially like I said, if Morgan Stanley's taking it, then I'll take it. But yeah, anyway, going back to gold and silver, let's have a look. Gold here. So with gold, there is almost no reason to buy other than its appeal as a cash reserve. There's not really any reason to go in long. Gold for conflict in Ukraine. What conflict? We had a missile, and that was about it. That was a bit of headline news for a day, and then it disappeared. Who cares? There's not enough going on in the world to drive a huge inflow in gold right now. Sure, there's problems. There's, like you said, Ukraine. There's also the Middle East, but it's all priced in. It's all, everyone knows it's going on. There's no new catalyst to drive gold any higher. Obviously, the natural drift of gold is to the upside. But if we're talking about taking a trade on gold right now, there is nothing to benefit from in terms of being a trader. Obviously, I don't mean that in a population type of thing with people passing away and all those types of fun things. But yeah, so gold really to me seems more like a short position. But again, there isn't really anything that drives me to sell gold. So if I'm trading precious metals, I don't want to trade it just because it's had a pullback or something, technical's happened. With precious metals, they are mainly driven by geopolitical events, whether, again, it's war, global rate cuts, whatever it may be. is all factors for gold. And right now, we just don't really have much of that. We've obviously got rate cuts on the table, but again, it's all priced in now. It's done. So it's kind of a case of, again, like who cares? I don't. Sup, James? Guess I was right again. Gold going up, looking to sell when structure is done. Yeah, ball out. I think that was. Did we agree on that one, or did I disagree? I can't remember. We go over a lot of charts on a daily basis, but yeah, I agree with you on that one. I think selling gold makes more sense than buying gold right now. But again, for me, it's not something I'm super bothered about really right now. Still quite happy with the dollar. We've got a nice pullback today. Whether this pullback is temporary and we continue to go higher, I don't know. Or whether this is, a reversal and this is the start of the reverse rally that we typically see after an election. We'll have to see. But yeah, right now, I'm still quite happy to say bullish dollar. Yeah, we agreed finally. Good stuff. Silver going up. Yeah, let's have a look at silver. Metals are doing okay today, but in the grand scheme of things, it's still not really moved much. Don't know what this is. Is it a doji candle? I'm not sure what people call them. But yeah, there's nothing going on in the metals market really. Oil, still looking for lower prices on oil. So let's have a look here. So my job this weekend is to have a breakdown on a couple of specific things. I want to definitely look into oil, because if I can catch a trade on oil down to $50 a barrel with a stop somewhere around here. So the reason it would be here is because it counts for the recent highs and the 200 daily moving average. This would be quite a nice trade. If I took this at 2% risk, which I probably will, I'd be getting close to a 5% return on this. So I think it's definitely a good trade to take. It's just, yeah, I just need to look into it a little bit more, especially with things cooling down a little bit in terms of tensions. It might be quite a nice one as we see a bit of a repricing in oil. Look at silver in the weekly. Huge breakout. Okay, let's have a look. Where's the breakout? I see 3 consolidating candles. But yeah, I don't see any breakout here. I shorted EuroCAD a little while ago. Yeah, okay. Well, I'm conflicted on EuroCAD, to be honest. It was, at the time of entry, it was a great trade to be in. But obviously now we've had developments in this market. It's not really the same. So I'm not really expecting this to go down to take profit at the moment. I'll be more looking to get out at break even, really. I made a video actually today, sort of discussing my risk management, and it's a little bit unique, I guess you could say. So I'm quite happy for this to hit stop loss. I think I've got about 1.5% risk on this. So I don't really care about losing that, especially after making 10% this month. It's really no damage. But because I'm not happy with it, I'm not going to just realize the loss where it is. It's just not what I do. So I'd rather wait for it to either hit stop loss and I'm completely out, done, trade's over, or come back down to entry and I can mitigate some risk by doing that and getting out at break even. Yeah, it's not very often I'll just manually close a trade in the middle of drawdown unless there is a specific reason, unless something serious has changed in the economics, which isn't very often, to be honest. Dollar Swiss and NAS. The silver breakout goes back to 2021. Oh, maybe I was looking a bit too short term. Let's have a look. Silver breakout goes back to 2021. Price broke $28 resistance. Yeah, I suppose actually you are right. It's broken out, but yeah, I mean, if you want to trade the weekly time frame, be my guest. But yeah, for me, it takes too long to make too little. 10%, you're doing well. Yes, I'm doing well. This month has been a very nice early Christmas gift, actually. The dollar has been, I've been saying it for a long time. I called euro dollar top. I made a video saying I'm selling euro dollar. It was right at the top up here. It's probably the easiest money I've ever made, actually. It's just shorting euro dollar this year, or the past couple of months. I'll exit if it accelerates above the high, but it's part of the strat. Good stuff. As long as you know what you're doing, then it's all good. Hi, Forex James. Feel free to call me James. You don't need to type my full name. Is the UK a police state like Elon suggests? Yes and no. So it's a police state for very specific things. I know there's people getting arrested for tweets and things, but I'll be honest, I'm not sure how real that actually is, or if it's just sort of negative propaganda. I really don't know. But I have a couple of experience with the police, and when I say that, it's not like anything bad, really. Don't think that. But they've always been quite cool. Like, there's never been a huge issue with the police. They're just humans doing their job. Obviously, you always get a bad egg doing something. Take this stream, for example. You've got great traders on here with reputable records and willing to help for free. But then, you look on the other side of the fence and there's people selling $10,000 SMC courses that are just rehashed YouTube videos. There'll always be a bad egg. Anyway, back on topic. Pound dollar goes to 1.27. Let's see. I've actually not been paying attention to pound dollar recently. So you're saying 1.27? No, I wouldn't say so, really. There's a possibility, but with the dollar dominance at the moment, and this is the move we've just seen, the sort of breakout, if you will, has been driven by the New York Open and the US news. So there's a high likelihood this is going to get corrected, hence why I'm short euro dollar at the price I'm short. Gold is probable to the downside for me. It's risen approximately 40% for the year. Yeah, it has risen a lot. We've had a great year for the gold market. The thing I see, though, is don't be the guy trying to short the top. And although it's not really the top, I know there's news coming, by the way, guys. Don't worry. I think gold shorts definitely make sense. But what I'm trying to say is don't short it just because it's risen. If you're going to short it, make sure you've got a real reason to go short. So yeah, moving on. I don't know if Nick's joining. I think he's work from home or he's away today or something. So we've got core PCE month on month in 40 seconds. We've got personal income month on month and personal spending month on month. Main thing is PCE. Get an idea of how inflation's going in the US, so we can see how that comes out. Okay, 20 seconds. Let me, I'll put this to the side like this, and then we'll pull up the dollar as well. Put this onto candles. Go to the 15. I doubt there'll be a huge reaction, so don't sit here expecting to catch a huge move, but we can always just watch the reaction. Oh, wait, hold on. It's stuck. Here we go. There we go. Cool. So dollar gaining a bit of strength as we are awaiting news. Nothing too drastic, though. Oh, we've actually got more news. We've got pending home sales, PCE year on year. Okay, interesting. We do have quite a lot of news, actually. It's more than I thought it was. Is it going to load? Or am I... let's check Forex Factory. Maybe it's loaded on there. Or maybe it's just not come in yet. Okay, so PCE came out at 0.3. Pending home sales was 2%, which is below previous. but better than forecasted, so it's not too bad. We have got personal spending at 0.4%. That beat, undershot previous, however, it beat consensus and was on forecast. We've got PCE price index month on month at 0.2, and PCE price index year on year at 2.3. So actually quite positive for the dollar overall. But yeah, nothing too crazy, to be honest. Thank you, Lee. I appreciate it. Hey, James, I am interested in joining Elite Traders. I wanted to know if you have any discounts, and also do you have any other professional traders in the group? Yes, we do. So the discount we've got on at the minute is the biggest one we've ever done. It's 50% off forever. We work actually it's kind of opposite to the A1 signals. We don't have just a one-time payment. We are a subscription service. It's normally $100 a month, but at the minute, because of Black Friday, it's $50 a month if you get it now. And we do have professional traders. We've got one guy that works at a bank that's a member. We've also got a certified, certified, he's Series 7 licensed trader that works with me doing that analysis and trades. So we've got a very, very strong team behind us. James, it's Elite Research tool. The Elite Research comes with the membership. We don't give it out for free, and it's not an individual service. It's just part of the Discord server. So there you go. Anyway, moving on. James, what do you think about Australian dollar, US dollar? I think we are heading to the downside further. The problem is that I see with Australian dollar, US dollar at the moment is the current support level that we're hanging onto. So if we look, we've already seen one rejection that didn't amount to anything. So we had a rejection, a very, very small push to the upside, and now we've come back down and rejected again on yesterday's daily candle. We did also have CPI for the Australian dollar, was it this morning? I think it was, which did cause some bullish movements. So it's not the most clear trade for me. It's not something I'm desperate to get in like I am with euro dollar. However, I do think looking more at the global macro, it definitely makes sense for it to go lower. Thoughts on dollar yen? Really don't like dollar yen at the moment. So I was discussing this actually. It might have even been on stream yesterday. I can't remember. But on face value, the dollar yen seems like one of the easiest buys at the moment. Obviously, we've got very good dollar strength. Let me actually just put this back before I forget. We've got very nice dollar strength. It's very clear. Been a huge run to the upside. But the problem is the yen is actually starting to pick up strength again. I mean, look at the yen index. It's the daily time frame. It's doing very well. We're also primed for an intervention. It's almost guaranteed to happen. It's just a case of when. So it's not something I would be involved with. I'm not buying it because of the yen intervention, and I'm not selling it because of the dollar strength. So it's kind of a market I'm just sat out of completely right now. The dollar is moving up. Yes, let me just check. Euro dollar is moving quite nicely, so that's good. What about gold now? God, you guys love gold. There's nothing going on with gold. Nothing has changed. Nasdaq. Yeah, we can have a look at Nas. Here. Actually doesn't seem like a bad long position from here, especially on the H1. So we've got a very minor level of support that is actually being respected here. We've got the 200 moving average. We've got the RSI that's about to become oversold. The momentum or the short-term trend here is obviously to the long side. So I wouldn't mind going in long something like this. You know, take profit varies, but this would be the overall idea. I'm not taking it. It's just not my style really right now, but I understand why someone would want to. Silver, we've already gone over the metals. Feel free to rewind. SP500 with news. I'm waiting to go long on the S&P actually. We are seeing, actually let me go to the H4 here. We're seeing a minor rejection here. So the thing is I've got with the S&P is I would love to get long. I think 2025 is going to be another great year. We've already got bank targets. I think it was Bank of America and someone else. I can't remember who it was. It might not even been Bank of America. But anyway, we've got some bank targets here ranging from 6,666 to 7,000. And that's for the end of 2025. So I'm quite happy to start positioning myself long. I just want to see a break of this resistance. I don't want to buy into this market where it is because we've just rejected previous all-time highs. And for me, it just doesn't make sense to buy right now. So I'd be waiting really for the full break of this level and then potentially the retest to continue to the upside. Can you check daily trend line on GU? Looks quite bullish. Problem is I'm very bearish on pound dollar. This actually is a good point. I'm glad you brought this up because let's also look at euro dollar. So just remember this trend line on pound dollar. Think about how many retail traders were going long on euro dollar at this trend line here. You can see we did have a bit of a reaction off it, but what's happened since then? We just melted to the downside. And this is why fundamentals are so much more important than price action. Because if you were trading trend lines, you would have got in here, you would have been up quite nicely, thinking, this trade can't go wrong now. Easy money, just buy trend lines, and you would have been liquidated very, very quickly as the fundamentals come into play. So yes, the trend line looks bullish on pound dollar. Does it mean that we're going to see higher prices? Not necessarily. We're seeing a reaction very similar to what we did on euro dollar. So, take of that what you will. I'm not saying we're going to see huge drop, but just be careful. Trend lines and technicals aren't always as easy as they seem. Zach, it's good to see you. Pound yen, we've just covered pound yen like 2 minutes ago. CFTC say that's commercial side of increased long euro. Don't care. I don't mean that in a rude way. I mean, I just don't care if it's changed right now. The fundamentals to me are still bearish. It doesn't matter if some guys in suits think the opposite. I will be the one laughing in the end. Bearing in mind, I was calling shorts when they were all still calling long. So although, COT is obviously a great tool to use, it's not the end all and be all of things. Dollar CAD. I'd love to get long dollar CAD, actually. I'm just waiting. Oh, now might be the time. Almost. Oh, sorry, that's the wrong market. Dollar CAD here. Yeah, not quite yet. I'm still waiting for the retest of this previous resistance down here. Reason is, again, as I was talking about oil with potentially lower oil price in 2025. Obviously, that will impact the Canadian dollar, and this market could be set to go up to these previous highs up at 1.46. So that's kind of the plan with dollar CAD, but again, the entry seems quite far away at the minute, so things may change. But just for future reference, I'm in. If you spam it 3 times in the space of 1 minute, I'm not going to do it. Opinion on dollar yen. Guys, we've covered dollar yen, but I'll do it one last time for the people asking. Dollar yen seems like a great buy because we've got very clear dollar strength. The yen is viewed, especially in retail, as a very weak currency. And yes, it is. But if we look at the daily charts on the yen, it's gaining strength where almost guaranteed an intervention by the MOF. So I don't want to sell because of the dollar strength. I don't want to buy because we're primed for an intervention. So this market could go either way. I know, obviously, that's a given, really, but it's just too uncertain for me to start taking trades here. Gold short term to the downside, really. There's nothing really in gold that gives me anything really. Bad day going on here today. Sean, why? It's good to see you again, as always. Key check dollar Swiss. Yeah, we can have a look at dollar Swiss. Yeah. The daily looks quite nice to go long. The weekly doesn't look great. H1 doesn't look good. H4 looks okay. So the weekly is bearish. We've created a lower high. Well, so far it looks like we've created a lower high. We've got the 200 moving average that's still hovering above price. However, on the daily, we have actually just crossed over our 200 daily moving average. We have structure here. So this might present a decent level to start trying to buy from. But again, that weekly time frame is just raising a bit of a red flag for me, to be honest. Euro AUD. Yeah, we can have a look at that one. There's a position on Euro AUD actually at the moment. So this isn't my position. This is a position from Morgan Stanley. Looks fine to go to the downside. It's just slow. It's a slow market at the minute. We had a really strong move down, quite a slow pullback, strong move down, and now again we're pulling back. It's just not, technically it actually looks fine, but in terms of just the speed of the trade, it's not really there for me. It's a bit too slow. But yeah, overall, I'm still completely fine with going short on euro. And I think the Australian dollar is a relatively stable currency to go short euro against. Also, what points should I focus on when reading fundamentals? Like, what points should you keep in mind? That's a good question, actually. Everything. So take note of the labor market. So NFP, unemployment, wage growth, those types of things. Also pay attention to central banks. What are central banks going to do? What does the data that you just read indicate the central banks will do? And things such as that. I mean, there's so many different factors with fundamentals. I can't, if I sat here and explained it all, I'd be here for the next 7 days. But yeah, I think get the basics first. And I know that probably actually was really unhelpful. But if you want me to expand on like a specific point, let me know and I can do. Technically looks like a long. Fundamentally, I'm not too sure. Oh, AUD NZD. Okay. Yeah, so the Australian dollar New Zealand is definitely long. So I've had this trade planned for, I think, about a week. And it's actually, I don't like this momentum, to be honest. So I might have to reconsider this trade. But the idea was essentially to capitalize on the trend line here, wait for this pullback, rejection of the previous highs, and then continuation to the upside. But yeah, the momentum we're seeing at the moment, it's really putting me off. It's very strong. So I might have to stay away from this market. But overall, I think long positions are still in play. Sean, thanks. Just having a bad trading day. My new prop challenge account is down 2% on the day. Overtrading is the culprit mixed with day trading strategy, which has gone through a rough patch. Sean, I'll be honest, 2% is nothing. You can make that back in one trade. Don't worry. Every strategy, I'm probably preaching to the choir here, but every strategy has down points and those times where it just doesn't work out. But this is where the back testing and the data and prior results are really helpful, because then typically or generally where or what max drawdown can I expect, how many losing trades in a day can I expect, how many wins can I expect, and those types of things. It really helps keep psychology on track. So for example, if you had a strategy that was, or let's say, for example, twice a year, you can expect to have a drawdown of 6%, and you start having a drawdown of 4%, then 5%, then 5.5%, and so on. Then you can say, okay, well, this is expected. It's part of my plan. How do I manage it? How do I mitigate risk? Those types of things. Then you start building from there. But again, probably preaching to the choir, but that's generally the best way to go about losing streaks, is just look at previous results and remind yourself that you're fine. James, what's the best EMAs to use? I use the 50 and the 200. I don't really use anything else, never have. And my swing strat has been taking a beating, had a couple of good gems. Well, there you go, making some money, that's good. And how good is CCI? Never use CCI. US oil. Yeah, we can have a look at oil for sure. I think we already did look at oil, but I'll go over it again in a second. Cool. Okay, so US oil. Now, I am expecting a short on oil down to around anywhere between $60 and $50 a barrel for 2025. This comes with Trump basically not being very nice about oil, saying that, essentially the oil demand that they're going to need is lower if they're producing more in the US. We've also got tensions in Russia, Ukraine, and the Middle East. And if they start dying down with Trump's power, then we might start seeing an outflow of gold. Obviously, when we have things like war, especially in the Middle East, we can typically expect oil prices to go up. Obviously, we've got heavy oil exporting in the Middle East. So if there's supply fears, that drives up the price. And then obviously if the opposite happens, then that would drive down the price. That's a very face value way of explaining it. Like I said earlier, I need to do a bit more research on oil, and I'll come back maybe next week and give a bit more of a detailed overview. Yeah, 50 and 200 are the best. Yeah, it's just the ones I was taught to use, so it's just what I've stuck to. James, how about US 30 if you don't mind? Yeah, we can have a look at US 30. Oh, it's screaming. It's doing really well today, isn't it? Or recently, it's doing very, very well. I think this is a very simple trade, actually. It's a case of just waiting for the pullbacks. So like here, for example, wait for draw fib low to high. We've got a 50% retracement. We enter long, got low, and then wherever the next high is, look for 50% retracement, enter. It couldn't really be any more simple, to be quite honest. The technicals are basically non-existent because it's just moving up. Sean, it'll all be fine. Absolutely. It's always fine in the end. Israel and Hezbollah agree for ceasefire. Yep. The USD news we got this morning. What effect does it have on UJ? Well, have a look on your chart. What effect has it had on UJ? Clearly not very good. We are seeing a bit of a correction, which typically happens after large moves in the markets. We often see this pullback. But yeah, overall, I'm not really sitting on either way on pound yen. On dollar yen. Did someone actually ask for dollar yen? Oh yeah, you did. Okay. Cool. Speaking of which, let me check euro dollar. How's this one doing? It's doing okay. Not too much going on there. Euro card doing it okay. Yeah, cool. Pretty stable at the moment. How would you know whether a news is priced in? If you've heard of the news, so obviously, let's take NFP, for example. NFP can be priced in to an extent because we have forecasts. So let me hold on. Give me a second. There we go. So this is NFP for December. So we've got a forecast of 194K. So that means people are expecting it. So that means it's priced in. However, if we get something that deviates from 194K or that sort of range, so for example, if people expect 194 and it comes out at 150, we're going to see a big reaction because people priced it in wrong. There'll be closing positions, opening positions, and then exactly the same if it comes out higher. If it came out at 250, for example, we'd see the opposite effect. So that's kind of how you can guess it or kind of gauge it, is if on these forecasts, if it's there on a forecast or a consensus, you can expect it to be priced in. Central banks are priced in a very similar way. So for example, if you are a retail trader, which I guess you are, and you're sat and you get a Bloomberg notification that says Fed expected to cut 25 basis points in December, you can expect it to be priced in. That's not a shock because trust me, people smarter than you have put more money than you in the market already around that. So this is why, for example, when you get news and there's no reaction, even though if it's a big red folder event and there's, it's a flat reaction, it's because there's nothing changed. It was expected already by the market participants. Whereas if we get a huge shock number, like we did when, with anything really, then that's when we can start expecting the big moves. James, in your experience, what are best pairs to trade that respects technicals quite a bit? None, really. Every market has its own behavior, so it's like a person. So every market is unique. Well, obviously it depends on what correlations and all that stuff, but we'll skip past that bit for now. So every market will benefit from different things and will react to certain technicals differently. So, for example, a highly volatile market, so something like euro dollar, you know, you could expect one thing. Then on something like gold, you might expect something else. It's, you know, for me, technicals are very unimportant, really. Generally speaking, obviously, sometimes depending on what I'm trading and when, they can be more important. But what time frames are you using for intraday? I use the 15, the H1, and the 1 day. So I use the 15 to execute. I use the H1 just to make sure the level's okay and, you know, the overall market's okay. I use the daily just for the overall trend. Why is US market closed tomorrow? It's closed for Thanksgiving. So Thursday, Friday, so tomorrow and the day after, we'll typically expect a very, very slow market. So won't be a very interesting couple of days. Been studying for 1.5 and using demo accounts. I finally opened my first active account 2 days ago with 150 and I've already doubled it scalping self-taught because of Furu's on YouTube. Good stuff. The only thing I'll say about that is, first, obviously, congratulations for doing so well, but also don't get this actually happened to me, and it was a really big downfall at first. Is I think it was about $500 into a trading account when I first started. I turned it into about $5,000, and I was like, yeah, this is so easy. I'm going to get rich off this. And I lost all of it. And then I kept trying to do the same thing because I thought it was normal. I wanted the dopamine, and it was a really difficult cycle to get out of. Any thoughts on volume profile? No, don't use it. Never have. Don't know anything about it. I'm a bit of a boomer trader, I guess you could say. I don't know about a lot of trading things that I don't do. So unless it's something I use or something I trade or whatever, I'll know about it. If not, then it's probably not on my radar at all. It's like candlestick names. I don't really know them because I don't talk about candlestick names. It's not part of the way I trade. All I know is an engulfing candle. And again, that's because it's something that I use. But other than that, not really. Dollar still dipping to the downside. Euro dollar not really doing much. Dollar yen seems to be recovering a little bit, but I wouldn't be too hopeful. What else is there? Volume is an interesting one. Volume profile will be broker specific on Forex. Yeah. Yeah, it's just not really piqued my interest. And I'm at the point now where I don't really care about things that aren't part of my trading plan because I've got no interest in adding to it or taking away from it or changing it. So, you know, I could see a video on YouTube that's like, 1,000% profit using X indicator or whatever. It doesn't interest me at all. So AUD NZD, we've already covered. I'm in, but essentially I lean more towards going long, but at the moment it's just a little bit dodgy because the downwards momentum we're seeing is very strong. So it's not something I want to get into right now. Maybe next week when markets are back to normal, I might consider it, but for now, sitting flat. Do the USD pairs usually move unpredictably during holidays? No, not really. Not from my experience anyway. If you're trading E-minis and you get a true sense of volume, yeah, it's, again, not what I do. Just CFD trader, spread better. Degenerate at heart. Advice for a trader struggling mentally, psychology. Yes, get a strategy. I say this all the time, but I don't believe in psychology. I think the only reason people struggle with trading is because they don't have the stats. So, for example, as I was saying earlier, if you have a strategy and you know for a fact over the past 10 years that you typically hit, I don't know, let's say 5 or 6% drawdown twice a year, or your average win is 2.5%, your average loss is 1%, you know all these stats, everything about your strategy. You know it and you understand it. Why would you have any problems? The only reason these psychological problems come in is because you don't have that information. So, for example, if I was sat looking at euro dollar now and I had no information, I had no idea about the economics, I had no idea what to do, obviously I'm going to worry because I don't know what I'm doing. But it's, not quite the case when you do have that strategy and things. I know it's probably not the answer you wanted, but that's just my opinion on it. And there's other people, I also heard an argument for this the other day. I think it was on Twitter, and he was saying that if I gave someone a 99% win rate strategy, they'd probably still struggle or whatever it was. And I don't subscribe to that ideology. Yeah, Sean, exactly. Basically just what Sean said. NZD USD will dump. I completely agree. I was short again on New Zealand dollar today. Actually, right here, you can see this position. But I closed it at break even because I took euro dollar shorts instead. And I wanted to scale into euro dollar rather than have New Zealand dollar open as well. But yeah, I'm still very, very confident to say that the dollar pairs, pound dollar, euro dollar, Australian dollar, whatever it may be, are going to continue to the downside. How much does USD correlate with stock index and gold in your opinion? That's a good question. In terms of stocks, stock index, give and take. So there's a very common misconception with the dollar and things like the S&P. I'll just talk about the S&P, but you know what I mean. I'm talking about all indexes, or US indexes specifically. So there's the misconception is that when dollar goes down, the S&P should go up, and vice versa, and they're not completely inverts correlated, I think it's called. That's not really how it works. They benefit from different data points in different ways. So, for example, lower interest rates, or let's say interest rate cuts, generally affect the dollar in a bearish manner. So we can expect the dollar to go down, whereas then we could expect the S&P to go up. That's kind of the main situation there. In terms of gold, again, dollar and gold can benefit from the same thing at the same time. So again, let's talk about war. So in war, the dollar benefits. The gold also benefits from that, causing XAU USD to go to the upside. People get confused. Oh, well, gold's going up. Shouldn't the dollar be down? Doesn't work like that. But anyway, there's lots of stuff on the internet about correlations and things. So I'm not going to do a full course on that. I need a course or mentor, but haven't found anything real besides people on YouTube trying to sell a dream. And I stumbled across this account a couple of hours ago, especially if I make money, how to separate taxes. Taxes, don't worry about taxes right now. If you've got a $100 account or $150 accounts, it's not something you need to concern yourself with. And I don't know where you live. And I'm not a tax specialist. But there's certain ways. So, for example, I'm in the UK. One of the ways to get around paying taxes on capital gains, or the majority of taxes on capital gains, is by spread betting, which is what I do mainly. So the MetaTrader 5 account that I show you is kind of just a way to track trades. It's not a real, well, it's a real account, but you know what I mean? It's not my real personal account. Anyway, I hope that helps. Guys, I think I'm going to call it a day. Let me just check here. Oh, actually, it's not been too long, almost an hour. There's no one on after me. So if there's any final questions, let me know. If not, I'm going to shoot off. No problem. Appreciate your explanation. The internet confuses me. Yeah, this is the problem. There's a lot of conflicting information. So it can be difficult. I understand. Oh, that reminds me, guys, if you can, I appreciate it if you can subscribe to my YouTube. I'm almost at 2,000 subscribers. That'd be a nice milestone to hit before the end of the year. So if you could take 5 seconds and subscribe, it would mean a lot to me. In the meantime, I'm going to go. I hope you guys enjoy the rest of your days, and I'll see you maybe next week. I don't know if the stream's on tomorrow for Thanksgiving. Probably not. So yeah, I'll see you guys next week. Have a good one. See you later.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com. including the brand new stock box, pulver alerts, the Edge Finder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.